Testing, testing, 1 2 1 2. All right. So to start off this morning, we'll start looking at the low floats. Low floats today, we have IVP up here, AEHL. It's up 22%, $3.14 with 4 million shares traded. High floats, we have Nvidia leading the day, but it is red. So it's almost to 5 million shares in pre-market. A lot of attention for a large cap in pre-market. Behind that is BABA, Google. One of the ones that we, wait a minute. AEHL getting a little pop there. Up to 344s. Now leading the day up 30%. Let's go look at this daily chart here. I don't see any catalyst for today on this one. AEHL yesterday closed around 253 and now is at trading around 322. So it had a 436 up here, and I think it's already went up here. Let me mark this as a possible daily level of 436. Then go a little bit further back, and it's all the way up here, 8 something. So I don't even know if that's going to be doable today without a catalyst. Yeah. All right. CJET from yesterday ended up crashing out. So glad that Charles Schwab was blocking these Chinese stocks. Look at this dive down. Hold up. Let me go to the 15-minute. Look at this right here. CJET from yesterday. This is the Chinese company that we were talking about. And a lot of times, Chinese companies will do you dirty. And it did it yesterday. Right at the end of the day, anybody that was holding this for maybe a continued move, it went up to 323 and closed the day all the way back down here at 125, which is insane. AJ called out Ruby. What is Ruby? RUBI. Oh. Good morning. Good morning. Ruby, 22 cents. Another cheaper one. Let's see what it announced. Time charter extensions and contracted revenue backing of 120 million. Let's go look into this. So Ruby, RUBI. Let's go look at the float first and see if it's a higher float or what is this thing. The float is 1.45 million, so it is a definitely a lower float. Not a whole lot of institutions or insiders inside of it. Let's go look at the profile and let me take notes while I do this so I don't waste time. Okay, Ruby float was 1.45 million. Then we got on the profile Rubicon or Rubico Inc. focuses on tanker vessel transporting business. The company is headquartered in Majuro, Marshall Islands. So Marshall Islands. Okay. Majuro Marshall Islands operates independently of Top Ships Inc. as of August 1st. So it used to be a part of Top Ships. I think Top Ships ticker was Top or something like that. I don't even know if they're still in business. So this is what we're looking at. And this is the 15 minute. Let me go to the 1 minute. So on the 1 minute, all of a sudden, just absolutely shooting out of there from 16 cents. Now, what does that mean? That if it closed that low at 16 cents, that means that once the market opens, its halt levels are gonna be super tight, super tight. And you know, it's not a lot of motion that it can do legally without, you know, markets stopping it. So coming on up there on that catalyst. Let me see how much volume that it has on here. Surprised it's not on my scanner yet. It should be 21 million. Oh no, whoa, why is it showing shares out here? So on TOS, the shares are showing as 40 million. So 40 million, but it has a share, the outstanding shares are showing at 40 million, but it has a share float of 1 million, right? That's why it's not on my scanner. Outstanding shares need to be lower. Lower. Okay, and let's go to, yeah, well, 41. It's got 23 million shares traded during this morning. And we'll see if it does a round trip or what. Are people interested in a 121 million revenue backlog? Backlog. I don't know what that means. Does it mean that it has assets like that or what? Let me look into the news here. Rubico, the company, an international owner and operator of modern fuel-efficient eco-tanker vessels, announced today that it's entered into agreements with a time charterer of both its vessels to extend their time charter employment. Specifically, both vessels will continue earning a gross daily hire rate of 32,000 until the 11th of January 2027 and thereafter, and for 4 years. They earn a gross daily hire rate of 29,000. All other terms will remain as per the current charter. Okay. Well, I'm not a big boat guy, so I don't know what that all means, but yeah. I don't know what all of that means, but yeah. Let me go and look it up, I guess. Do a little learning while we're here. So what does it mean to have, what does it mean? Uh, okay, so this refers to Rubico, blah blah blah. Okay. Bank log versus backlog. So the term bank log, wait, did I put bank log or backlog? Oh, that's why. Backlog. Okay. Future revenue commitments. So they have 121 million future revenue commitments. Backlog is the total value of signed contracts that the company will earn over time. It's not cash in hand, but guaranteed income based on existing deals. For Ruby, this indicates that its fleet is already booked for work, providing predictable earnings for upcoming quarters or years. Financial strength indicator, large backlog signals strong demand for companies' vessels. And it's not immediate liquidity, but it can boost investor confidence. Okay, so they got some contracts and commitments on their backlog, is what they're letting us know. Let's go look at the daily chart there for Ruby. So on the daily chart, we can see that it has definitely had quite a trip down. Let's see, what is this? This is back on 8/4/2025. So not that old of a stock here, just a couple of months old. Looks like what's that? September? No, August. And then it came down here and fell. Let me see if it's done reverse splits or something. Majoro is down here, reverse splits. Has performed splits. Hasn't done any stock splits. It's just been going down then. Okay. So yesterday, let me zoom in a little bit. Yesterday it closed at 15 cents and now it is at 23 cents. So there's a little bit of a gap right in here, right where it is. So I'm going to mark this as possible, well, high and low gaps, I guess I could put on there. So this is the lower daily gap at the 2204, and then the higher daily gap at the 23s there. Then if we back up some, we'll see there was a peak out here at 27. Daily peak level. Okay, and then if we back up even more, there was another peak at 35. Okay. And I think that's all we got actually. That is near and probably the furthest back people are gonna look. All right, so let's go back over here to see where those fall on the 1-minute chart. Okay, and this thing is still well below its ATR high up here, which is at 30 cents. So a lot of times when we're looking for things that are going to be moving up, they gap way above their ATR highs, and this one is not even, it's still trying to fight to get there. 30 cents, 6 cents away. All right, so forming a little high up here, 24 cents. Let's jump around here. Okay. Yeah, AJ, Ruby does sound like a good one to stay away from. It's cheap. Well, there's kind of some inconsistency with the float, with the outstanding shares being that high. The float really probably can differ between different platforms. It could say 1 million over here, 5 million over here, and I just don't like that. I like for those outstanding shares not to leave too much room for guessing. Okay, so let's jump over here on the news. So first thing we see, the legacy of Doge is cut first, ask later. U.S. stock futures stall after tech's biggest rally since May. Alphabet's rally is set to shake up tech landscape. So these kind of articles here, I'm not I don't really treat them as news on a day just because they say, "Hey, Alphabet's rally to set to shake up." Well, what are they actually doing? Did they get a new deal? What did they do? And why isn't that thing on the headline, right? So something like this, I just kind of browse over. I'm like, oh, okay. Bitcoin sell-off shows signs of easing. Um, Treasury slip on risk. U.S. data will show return of inflation. Gold steadies after jump fueled by rate cut hopes. Alphabet on pace for 4 trillion market cap amid AI push. Again, it needs to be doing something, and it's on pace for that. But what else is it bringing? Panasonic's energy unit to supply auto batteries to Amazon's Zoox from 2026. Okay. Oil dips as traders track progress in Ukraine, Russia peace talks. Xi puts biggest U.S. China flashpoint back on agenda in Trump call. China's Ant Group quarterly profit up 10.3%. Alibaba revenue tops estimates with strong instant retail AI push. India's Zetwork. Is that? Oh yeah, that is. Zetwork hires banks for IPO filing next year. The dirty secret of America's holiday shopping season. The dirty secret. Okay. So yeah, let's see what they're talking about today. This one, wise retail expert doesn't believe there's a K-shaped economy. Goldman's push 2026 AI could change the workforce by 2030. I mean, it's already changed the workforce. So let's go over here to video. Okay. So let's see.
Google parent company launching its Gemini 3 chatbot with resounding success among investors and leapfrogging rival Microsoft to total market cap. For more, we're bringing in now Yahoo Finance tech editor Dan Howley. Dan.
Yeah, that's right, Josh. This is a big move for Google. Really, they announced this Gemini 3 model last week, and since then it's kind of picked up momentum when it comes to executives. Mark Benioff at Salesforce basically saying in a post on X that he's just going to leave behind GPT now and just go with Gemini. That's a huge vote of confidence for this model. And in different benchmarks, it appears as though Gemini 3 bests ChatGPT, or rather GPT-5, in a number of areas. So this is really helping to boost the company's stock price because it more or less shows that, it's not necessarily a one horse race when it comes to these kinds of things where, ChatGPT, or GPT rather, had the lead for a while. And now Google's come out and said, all right, well, we're going to take it back. And so it's good at everything from, your reasoning to things like coding, which is actually incredibly important in this area because a lot of companies end up using these kinds of AI models for some coding capabilities. And so the fact that it's able to outcompete GPT-5 there is hugely important for Google. And so, bottom line, investors like this, and it shows that those investments are paying off, at least as far as advancements in the AI models. Now, as far as what that means for their actual business and revenue, we just have to see.
And also, Dan, you wrote about Anthropic's latest AI model. What's the news there, and what does that mean for kind of the broader competitive landscape?
Okay, well, Gemini 3, that was in the lead for a few days. And now we have this new version of Claude from Anthropic, Claude 4.5, that Anthropic says is better than Gemini 3 and Pro and GPT-5. And so, it really is this kind of cycle where you see one company come out and say, look, we've got the best model. And then the next thing is, oh, we have the next model, and then the next, it's kind of this cycle. So no one is ever really on top. As I said, it's not a one-horse race. We keep seeing all these companies come out with new models, and then they'll best someone as far as coding, someone will best someone as far as reasoning. And so I think we spoke about this last week when Gemini 3 came out, is that it really comes down to what individual enterprises want to get out of their AI, and then on the consumer side, what you want to get out of the AI that you use. And so there's no win all be all at this point.
So basically, when you think about these models that they're coming out with, new models or whatnot, it's basically just training data. So even to get to the point that they are right now, it takes hours and hours and hours, hundreds of thousands of hours to collect this training data. I don't know where they're doing their research, but each company has their specific niche, their specific fields that they're collecting data from. All of these ways that we can make money with our data, selling our data. I don't even know if y'all do any selling of your data, but you can actually sell data to companies, and they train their models with it. Whether it is internet data, whether it is mobile usage data, whatever data that they want, you can actually sell it and make money off of it, just like you can sell any other product that you create. So these new models coming out, Gemini and all of this, blah, blah, blah. I don't know how they're getting this data that quick to continue to modify their systems or their models. But apparently more and more people are like, oh, you're doing this, we can make money from selling our data to you. Okay, it's kind of like the people, like selling your blood, actually, like giving blood. You give them a little bit of your blood, a little bit of your lifeline, and they give you some cash back. So, it's kind of a interesting way that this competition is going, seeing that almost every day these models can learn something new. Every day these models are getting smarter and smarter, and people are boasting on them, saying, hey, ours is better or whatnot. So it's kind of cool a little bit.
Fed also in focus, of course, the odds of a rate cut now even higher. What is driving that move?
Yeah, moments ago, we actually learned that San Francisco Fed President Mary Daly says she now supports a rate cut in December. She told the Wall Street Journal in an interview this afternoon that she sees a significant deterioration in the labor market now that is going to be more difficult to tend to than a flare-up in inflation. Now, her comments coming just after this morning, Fed Governor Chris Waller, who is a voting member, expressed support again for a rate cut in December, also saying that he has concerns about softening in the job market. He believes that the stronger September jobs report that we saw of 119,000 will actually be revised down by 50 or 60,000. Now, when it comes to next year, he says the FOMC is probably going to take meetings or interest rate decisions meeting by meeting. But all of this goes back to what we heard on Friday when New York Fed President John Williams really changed the sentiment in markets, saying that there is room for a cut in the near term. And since then, we've really seen odds shoot up this afternoon. Investors placing bets about an 80% chance for a rate cut next month. Josh.
All right. Thank you, Jen.
Rate cut.
How do you sort of square that, Jerry, with the negative vibes out there, right? For lack of a better word, right? We keep hearing about the K-shaped economy, that lower and even middle income Americans are having a tough time right now, right? We see the sentiment surveys; those haven't stopped, and those aren't great. So how do you sort of square that with the spending?
Right. Well, great question. But everything's relative. I don't really think there's a K-shaped economy. People keep saying that. I'd like to put a stake through the heart of that. K implies one part is rising, another part is declining, the bottom part of the K. That's not what's happening. All the parts are still rising. It's just, of course, the higher income areas with a growth in the stock market are rising at a faster rate. The lower income areas are rising at a slower rate. But they're still rising. Wages are still exceeding inflation. It doesn't mean people aren't feeling stress. The cumulative effect of years of inflation definitely weighs on people. It doesn't mean lower income strata aren't spending more on necessities instead of fun stuff. But they're still spending when you really look at the data, at what's actually going on. So that's why I feel pretty confident the result's going to be pretty good for the holidays.
Yeah, that's what I was thinking.
David, coming out of
everything, the market. Actually, speaking of the market, let's go look at the market. What you doing over here, buddy? All right, so let's back up a little bit. So the market continues to hold. So before we saw this kind of position of strength that was made here back towards the 24,500s. Then we had this huge rip down under it, right? So anybody that had their stops or anything like that, they got clapped. Then it came down, made a new low down here, 23.9 whatever, and started to build up again. And now it is starting to reclaim this previous trend that it had back here and just play around here. So I'm looking to see if it's going to make that next move back up there to the 25,000s, especially coming into the all of the discounts, the discount arenas and things like that, where these companies are going to get their chance to take advantage of people being out of the house or even internet shopping, cyber shopping. AEHL, what are you doing here? It's popping a little bit. What is it doing? Oh, it's only up 26%. I just saw it popping. My bad. Thought it was doing something. Okay, never mind. But AEHL is on the low flow scanner. Shares outstanding is shares outstanding 5 million. The float is probably even lower than this, but there's no catalyst. So that's the downside to that. Then we got Icon, which is pretty much doing nothing. AHL is catching up with Icon pretty quickly. And we'll see if we get anything else, but no rush. All right, back over here to the news.
block for you. This Goldman Sachs note really has caught my eye. They are recommending buying the dips in the market. Now, stocks are off their highs. Does buying the dip right now make sense to you?
Yep.
I think it does. When you look at the Fed potentially cutting interest rates, nobody's talking about them hiking rates. You look at unemployment numbers around 4%, and you look at a situation where the federal government has basically created enough stimulus that they're going to be running a $1.8 to $1.9 trillion deficit over the next several years. I think that's a very good reason to think the stock market will do well over the next few years upcoming.
Inez, welcome back to the opening bid roundtable. We indeed missed you here. So what do you think about this Goldman note? I haven't seen investors really come out here and aggressively buy this dip. It's like they're nibbling around the edges.
They are nibbling around the edges. Thanks. Great to be back here from Spain. I will tell you, look, investors are expecting, the Fed to come in and sort of save the stock market. You saw the rise on Friday. And at this point, if the markets go down too much, then you start to see announcements. You start to see, the Fed getting more dovish. You have President Trump that has eased off of the tariffs on beef, on coffee, the $2,000 stimulus. So yes, the expectation is that you don't want to let this slide go on too much, this volatility go on too much, and you will start to see more dovishness, and therefore, you're seeing stocks rallying because of this. If you look at what happened on Friday, also, Saz, you look at even the consumer names that have been getting beaten up. Chipotle was up on Friday. You saw Macy's that was up. Even Dave & Buster's, which has had a terrible year, that was also up on Friday. So there is this expectation that the Fed is going to step in, and you also have the expectation that the government is going to do things to sort of goose the economy, so to speak.
This episode is brought to you by the number 40%. That's the share of employers in the World Economic Forum's 2025 Future Jobs Report who say they'd expect to reduce their workforce where AI can automate tasks. The same report projects that by 2030, 22% of jobs will be disrupted, with 92 million roles displaced and 170 million new ones created. That's a net gain of about 78 million jobs. But a pretty violent reshuffling we've seen a bit in 2025. So how do you expect this to unfold into the new year in 2026? We got that Challenger Gray and Christmas report, I think 150,000 layoffs, and one of the reasons that they said was AI.
Everybody's blaming AI. I'll say it like that.
Is it not to blame?
In some cases, yes. But remember, AI is not necessarily replacing people in jobs. It's replacing tasks. A lot of these companies have two ways to go. And one of the things that I heard from the chairman and CEO of BlackRock of Goldman Sachs is saying that, listen, yes, jobs are going to be lost. But what we really want to do is take this opportunity to increase capacity. And that's a totally different outlook than a lot of these others.
Productivity or what?
For productivity. So if I can take these tasks off your desk and I can have you do something else that goes straight to our bottom line, what are we going to be able to accomplish? More. And so the first thought is do more. But a lot of these companies aren't looking at it like that. They're looking at it as, well, we're going to, fire, we're going to replace, we're going to do. Okay, we'll see who wins at the end of the day. But I think it's going to be companies, small businesses, large businesses, enterprises that are going to do well when they decide that we're going to increase capacity and really look at our people and say, we can upskill you, and not just in AI. We can upskill you in areas that we see are going to be necessary as we move forward.
All right, time now for what to watch Tuesday, November 25th. We're going to start off on the economy. We're going to be getting a rush of economic data on Tuesday, including the delayed U.S. retail sales report for September. Economists forecasting retail sales to slow compared to August to 0.4% on a month-over-month basis, signaling that spending is still growing, but at a cooler pace than the previous month. And speaking of retail, a lot of earnings coming out on Tuesday, including Dick's Sporting Goods, Best.
Hold up. Let's see. So Tuesday earning reports, Alibaba. So Baba is up here on our high floats list. Okay, so Alibaba, let's go ahead and notate that. We got Abercrombie and Fitch, Dick's, Kohl's, Best Buy, and Dell Technologies. Earnings coming up here.
Buy and Kohl's. Dell also reporting announced results for the third quarter after the markets close. Analysts expecting Dell's AI server sales to drop to $5 to $6 billion in Q3, down from $8 billion last quarter. But new orders could pick up again soon because big AI projects tied to NVIDIA's new Blackwell chips. And moving over to housing, we're going to be getting pending home sales data for October on Tuesday. That number expected to move to 0.4% for October, suggesting a modest improvement in the housing market. As Walmart makes more strategic tech plays, the retail battle may be shifting and bringing Amazon into play as an emerging viable comparison. Here to discuss, we've got Aptus Capital Advisors Head of Equity and Portfolio Manager, David.
Hold up. This thing keeps popping. It's looking like it's going to pop, but it keeps throwing these little wicks on AHL. Only up 25%. Right now, this is what is on the watch that I've taken notes of. Ruby was a call out, but I don't know how well Ruby's going to do. Baba, Dell doesn't have much volume, though. Baba's already got 1 million shares traded during pre-market, so people are definitely looking and calculating a move on Baba. Let's jump back over here.
Wagner. David, great to see you. So we'll compare and contrast the two, but I'm curious first, David, just to get your take on these specific names, because I know you have takes. Walmart, start there, reported. You saw the reaction. Investors clearly like what they had to say, David. You talk about its offense strategy, so the way they're leading into marketplace, Walmart Plus, automation. How confident, David, should investors be, in your opinion, that the kind of step up in CapEx that you're calling out here, that's really going to lead to meaningful top line growth here in the quarters and years ahead for them?
Yeah, Josh, well, one, thanks for having me here. I mean, Walmart is one of the best retailers in the world because over the past few years, they've been laser focused on technology and AI implementation. But more importantly, they haven't been reactive like some of the other retailers out there, like, say, Target. They've been more proactive and, more importantly, predictive. I mean, Walmart. They're implementing predictive analytics really in every single part of the consumer journey, whether it's from shopping to media targeting. that, really gets me optimistic about this stock moving forward in the future. I mean, they've really just, put like Target in the rearview mirror. And you're exactly correct. I think the better comparison now moving forward is comparing them to Amazon. But, at the end of the day, like what they've been able to do from the supply chain ecosystem at Walmart is really making the complete difference relative to any other peers out there. And that's why I'm actually okay buying the stock at 36 times forward earnings because of that technological advantage.
You note, David, how Walmart is becoming a tech-powered retailer. Should it be valued like one, David?
More so, absolutely. I mean, their 5-year historical, next 12 months PE valuation is probably closer to, say, 25 times earnings. That was more in parity like the other consumer staple stocks back in the day, like Procter & Gamble. They're trading at 36 times forward earnings right now. Josh, I actually love the move, though I was very surprised by it when they decided that they're going to move from the NYSE over to the NASDAQ, but it makes complete sense. To your point, like they've transitioned away from the normal corporate retailer and more to that, technological hub for retailers moving forward into the future. And by going to the NASDAQ exchange, that gives them the option availability to join the QQQ. And honestly, me and you both know outside of, S&P 500, there's so much flows heading towards the Qs, and it would only back their valuation from a capital front.
Vertiv, Next Era, Olema Pharma, Aero Environment. Are there certain common themes there in terms of fundamentals or business models that tie those together?
Yeah, my theme for the balance of 2025 into 2026 is follow the money. Where is all this spending taking place? We know it's taking place with respect to AI infrastructure. There's Vertiv Holdings. They supply the cooling solutions to the data centers. We know it's taking place with respect to power solutions. We heard that the U.S. government is looking to buy 10 nuclear power plants. How about NextEra Energy? They own FP&L, and they actually own 5 different nuclear power plants themselves. Biotech, we continue to see more and more M&A activity taking place as it relates to large cap pharma buying small cap biotech. How about a company like Olema Pharmaceuticals, which is focusing on breast cancer treatments with 2 drugs in the FDA approval pipeline? And then lastly, as it relates to aerospace and defense, trillions of dollars to be spent on defense across the globe over the upcoming years. Aero environment, unmanned, autonomous aircraft seems to be the wave of the future, and that's an area that we like as well.
Kevin, always great seeing you, especially on set. Thank you, my friend.
My pleasure. Happy Thanksgiving.
You too. Well, we're watching a split in the American consumer this Thanksgiving. Data showing that road travel is weakening sharply. Gas prices are sitting near multi-year lows, but 60% of Americans plan to drive this year. That's down from 72% in 2024. This is coming against the backdrop of what looks to be a record amount of air travel this Thanksgiving. For more, we're bringing in Patrick DeHaan, head of petroleum analysis at Gas Buddy. Patrick, always great to see you. So per your data, Patrick, we have what looks to be relatively cheap gas, but you expect fewer people to hit the road this year. What explains that disconnect, Patrick?
Well, Josh, great to be with you. I think some of this is chalked up to a little bit of economic anxiety that a lot of Americans are starting to feel. Now, looking at some of the numbers behind that, keep in mind we're just coming off a record government shutdown, millions of federal workers going without pay for, a month and a half. In addition, kind of some of this economic uncertainty, University of Michigan consumer sentiment for the month of, I believe, October was at its lowest point since 2022. Actually, that was early November data. That's a bit concerning, along with some of the most significant layoffs in a year since 2022. All of that is keeping Americans a little bit on edge, even though 74% of respondents said that gas prices are not impacting their travel this year. I think there's just a tinge of uncertainty that's keeping some of us closer to home.
At the same time, Patrick, we see these reports, U.S. Airlines predicting another record Thanksgiving holiday travel period. Airlines will carry more than 31 million people between Friday and Monday. So people not driving as much, maybe, Patrick, but they are flying. How do you think through that?
Yeah, no, absolutely. I mean, look at airlines have been struggling this year, at least some of them, with filling their planes all the way. And now with this government shutdown ending, it's back wide open. Now, look at some of the numbers already. The TSA predicting record travel. O'Hare, it's certainly one of the nation's largest airports, watching their numbers. that just came out for October continue to point to a very resilient air traveler. Look, I think the world continues to trend towards more mobility, longer travel periods during the year. A lot of airlines have called that out in their earnings that, you're not seeing the traditional pent-up demand for summer now. The summer travel, the travel season is extending. And so part of that could be travelers going to other destinations. Airfare is still relatively low, very affordable. Now with some of the economic uncertainty from the FAA shutdown being behind us, you could see people that have opted for some of those last minute trips. Any way you look at it, circling back here to gas prices, we expect the national average to tie what it was a year ago. Now, it may end up being slightly higher. We go into it today at this moment about 2 cents above last year at this time. So there's still the potential that we're just a little bit above last year. Having said that, another real positive development, 28 states are seeing an average price below $3 a gallon. So there's still plenty of affordable prices out there.
Where are the highest and lowest prices across the country right now, Patrick? What do you see?
Well, certainly behind my shoulder, that map, that color-coded map will show you the hot spots remain on the West Coast. California, Hawaii, Washington State, the 3 most expensive states when it comes to filling your tank up. And you'll find that a lot of lower prices are in areas that have not only lower gasoline taxes, but proximity to major refineries in areas like Texas, Oklahoma, Louisiana. In fact, amazing to tell you, just earlier today, Gas Buddy tracking 4 stations just outside Oklahoma City, falling below the $2 a gallon mark. It's the first time that we've seen what I'll call sustainable sub $2 prices since 2021. We've seen some of the sub $2 prices pop up earlier this year in Colorado. A lot of those are temporary, more like but promotional stunts. These stations in Oklahoma represent sustainable prices below $2. So certainly very exciting. And that's a sign what we could see more of as we get closer to Christmas. I do expect the national average to continue falling here in the weeks ahead.
Falling to what, Patrick? Because that's where you're kind of leading me where I was going. I want to say, okay, gas prices, we got what they are now. What's your early read on where they could be Christmas, New Year's into 2026?
Well, Josh, probably last time we spoke, I was a bit more optimistic that we'd already be seeing a national average below $3 a gallon. Now, it's some of the refinery snags that have developed in the Great Lakes. Refinery fire, the largest refinery in the Midwest about a month ago. Over on the West Coast, the BP Olympic pipeline being shut down. Refinery challenges in the West Coast have delayed the arrival of the potential for sub $3 a gallon gas. Now, all lights are go. This could happen here over the weekend. The national average flirting with sub $3 prices today at $3.01. I think it may take another week for us to get there. But when it does, we may see most of the rest of the year at or below that $3 a gallon mark, with some of the lowest oil prices today, by the way, in the last 4 years.
Patrick, always great to see you. Happy.
So we reviewed a little bit of news this morning. Let's swing through. So low flow scanner, AEHL just fell from 20% all the way back down to 14. IVP and all of these other ones are weaker. What's leading the day is Nvidia, which is red on the day, which is interesting with the market being up. But it had a big move yesterday, and I'm thinking maybe some consolidation today, thinking about where it wants to go and then making its next move. There's a lot of bullishness in the market, though, right now. So I think that next couple of days, probably going to be some consolidation in the higher floats. Now, we did see the earnings, though. So we took notes on Baba is going to be receiving his earnings today, Dell, and a couple of other ones. But Baba is a big name, and it also has already got 1 million share or almost 2 million shares traded here in pre-market. So one of the things I like to look at is not just the big names, but the big names that move. Nvidia, Baba, Tesla, all of these ones that move. What are they doing on the day? Because they've been lifting the market. Now, if the correlation goes away and, these things are making moves and the market's not doing anything, cool. But the market has been following these so strongly. I want to know exactly what these big movers are doing to kind of form a hypothesis of what's going to happen in the other sectors. As far as Ruby was a call. It's got 62 million, but it's just still around 21 cents. They got commitments, but I don't know how excited people are going to be outside that are not investors right now that they got commitments. They're already up, so buying at this point is just going to give the current investors time to either sell a little bit, take a little bit of profit or whatever. But I don't know if it's going to be something to jump into, especially being 21 cents. That thing is super cheap. Back over to what we're looking at. So we're going through the news. We went through most of this. Let's go back over to the front page and see if any new things have popped out here. Yeah, Google has been really trying to run up the bag behind Nvidia. Really trying to play catch up a little bit. Nvidia stock sinks as Google challenges in AI stocks. That's the top report. So we already know Nvidia is going to be one of those things that we need to watch. And it's already on the list anyway. Google, blah, blah, blah. All right. So Trump G speak for the first time since trade truce. That's 10 minutes ago. Best Buy lifts outlook as earnings beat forecast. Okay. So Trump signs Genesis mission order to boost innovation with AI. So Nvidia and Dell are up here, but they're not named in the top line. Treasury slip on risk. U.S. data will show a return of inflation. Alphabet's rally is set to shake. Okay, we already seen that. So this is the most latest news. So exclusive, Russia weighs how to prop up Russian railways, which is 51 billion in debt. Wall Street macro traders eye their biggest haul in 16 years. Panasonic, we've already seen this one. So these two are the most recent ones. Let's see if there's anything else more recent. Bull market could run on for as long as 5 or more years. Let's go see what that's talking about. Or did we already see this? I'm not sure.
The market just hit its 3-year anniversary, and historically, you say, that is a positive milestone. So let's start there. I'll double barrel this one.
Sure.
One, just walk me through that. Explain that. Why is that a positive milestone?
All right, we just got an addition to the higher floats. SNDK popped up here. I don't know what it's doing up here. Let's see what it says. SNDK SanDisk is popping up here. It's up 2%. And so it's making its way. I didn't see any news about it, but it is one with the ATR of $26.19 per day. That's quite a bit of movement for SanDisk. It is $226 per share. But yeah, SanDisk is out there gaining some attention. I don't know if their earnings are coming up or what, but it is what it is. Just calling it out.
I guess, Kevin, if I'm an investor, I hear that and I wonder, okay, so what are some big risks that could maybe break that pattern?
Yeah, anytime I see a significant milestone like that reached in the market, Josh, I turn to my research team in New Jersey and I say, is this a good sign that better days are possibly ahead? Or is this a sign that the best days were behind us? In this case, it appears as though it was the former, as they were able to go back 50 years and actually see that there's been 5 previous times when a bull market has reached its 3-year anniversary. And in all 5 times, it continued to move higher by an average total duration of 8 years, which would suggest we got 5 more years to go. The shortest duration was 5 years, which would suggest we have 2 more years to go. And in 2 cases, we hit double digits in terms of total years of that bull market run. Now, of course, this time could be different. Past performance isn't indicative of future results. We know all of that. But there does seem to be multiple tailwinds that would support the markets moving higher. But I still contend that the areas of the market that led the first 3 years may very well not be the areas that lead the next 3 years.
All right, so Senate called out, or he asked about how about Meta and AVGO. Only thing about it, their volume, the attention on them today isn't the hottest. They got Meta and AVGO. They made their big move. Was it yesterday or the day before? One of them. But I think they're going to be really trying to consolidate a little bit. These moves, sometimes, they make these big moves. People have to make their next decision. What's going on next? Let's look for the next news or whatever. And that's why I think we're seeing a little bit. Wait, I'm on the wrong one. I think we're seeing a little bit less volume behind this. Now, AVGO has a little bit of volume. It has an ATR of $17.37. Meta has an ATR of $19.65. So both of these make moves, but I think it's some decision making time as far as already having made the move. So we'll see how that goes, but I don't think they're the focus for today. Nvidia, Baba, Google, and SanDisk really showing that they are the standout players.
How do you sort of square that, Jerry, with the negative vibes out there, right? For lack of a better word, right? We keep hearing about the K-shaped economy that
Today is the 25th, so let's see if we have any speakers anytime soon. Nope, no speakers until, actually no more speakers this month, looks like. Okay. 27th, Thursday. Okay. Looks like we got a pretty clean week with a lot of wait and see. We have holidays that are probably going to, people are going to be out on vacation and things like this. So it's just a time to, wait a minute, what is this? Okay, so DGLY popped up here. It's $1.50, man. All these cheap low flows. We need something that can move, bro. Icon, IVP, DGLY, just not looking good, man. It is what it is. The focus is definitely on these larger caps still. People played the upside, and now people probably played the downside or consolidation. Different players coming into the market, they're like, oh man, it just made a big move. Let's get ready to play this consolidation. Oh man, it just made a big move down. Let's play this consolidation. That's one thing that I've noticed about the large cap traders that day trade. Instead of looking for big breakouts, they're like, hey, no, let's get this consolidation. Let's make this move. Low flow traders, we're like, man, I don't want to be caught in consolidation because it's hard to understand what the motion will be out of that consolidation with a low flow. Unless you got a good trend, a strong trend, unless you have something that's not super cheap, that is easily controlled, then you start getting to that spot where it's like, okay, we got a little bit of control here. We can make a play. DGLY popped up here with 12%. It went up to 184. It's got 2 million shares traded, but not a whole lot of volume. Was at 135, still relatively, well, very close to its ATR there, that red line. So yeah, I'm not sure about that. Icon, Ruby ended up going on down from that 24 cents all the way down here to 20. Yeah, go ahead and get rid of Ruby, and it looks like another large cap day. It is what it is. Man, I just been filling up my dividends up during this dip. Buying for real. Everything's dipping. I mean, crypto and all this stuff is dipping, but now we're seeing some recovery. And so now I'm like, hey, I'm just going to dollar cost average into stuff. I got good positions and, looking for those returns to continue. Buying the dip, baby. Not getting killed in small caps if I don't have to. And that's the thing, like either way it goes, if I don't trade a small cap, I'm still working, so I'm still going to make something on the day. But if I do, I want it to sell itself well to me. Like, I don't want it to be like, oh yeah, I'm worth 25 cents, but I want you to treat me like I'm worth $100. Nah. Okay, so Senate says data at 8:30, PPI data coming out at 8:30. So we will definitely be looking, watching, and considering all of that. Alphabet's rally. So I see some news over here. Alphabet's rally to, well, it's got Meta in it, but it doesn't necessarily name Meta. Anything else? NIO had earnings too. NIO. NIO came from 526 all the way out here to 586. Let's look at its news here. So let's go back to the top of the morning press release. NIO reports unaudited third quarter 2025 financial results. Q3 vehicle deliveries of 87,071, up by 40.8% year over year. Okay. And then NIO expects Q4 vehicle deliveries to be up by 65.1% to 72% year over year by the end of Q4 this year. So they've definitely been getting some rising revenue and doing their thing out there on the streets. Senate called PLTR had a good run yesterday. Yeah. Let's see what that volume's looking like for today, though. PLTR. Volume, lower volume. Like I said, a lot of these, they're having to think about what they want to do now. They're like, is it going to continue? That's why you don't see a lot on these low volume days. You don't see a whole lot of just sell off, especially after a big move up, unless some kind of news really comes out and splashes it down, because people are like, do I want to sell right here? I'm already in the green. Let me just hold for a little bit more and see if I can get a pop, because it's not the end of the week. We still got a, today, Wednesday, hump day. Now, is Wednesday a short? I don't think Wednesday is a short day. I think Wednesday is a regular day as well. I think. Let me see. Okay, yeah, it's only Friday that it's going to be closing early. So we are good to go on Wednesday. But Wednesday is the day that the Lord has made. That my statistics tell me that I will get maxed out. But we'll see what happens on Wednesday. DGLY making a round trip all the way back down to 8%. IVP continue to chop around. All right. Well, it is what it is. I'm going to continue watching, continue looking around, looking for new news to drop. But yeah, this is small caps have definitely been dead these last couple of weeks. New additions to the high float. So we got Nvidia, Baba, Google, SanDisk, Tesla making its way up there, about to catch up with SanDisk, AMD, and Irene. Okay, these are high or large cap movers. Am I long list of areas? Am I going to trade those large caps? So here's the thing. I look at all the market to make decisions in the market. Now for large caps and what's moving there, I use that news or whatever to make my longer term investments. To say, hey, the market's going towards AI. Hey, the market's going towards this and that and that. And that's how I fill up the bag with the long-term investments, right? For small caps, I want to know on the day, is the attention on large caps, right? Because if it's on large caps, why even bother with small caps, right? So I'm looking at these, one, because these are the things that have been carrying the market. Those tickers with those large caps with higher ATRs that are moving $20 or $5 to, well, let's just say $5 to $30 per day, is what's been causing all of these swings in the market. So first off, I want to see, okay, well, is the attention on those today? And just looking at them here, we can see Nvidia has 10 million shares. Now, on a slower large cap day, you wouldn't see all these here during pre-market. They may have like 500K traded or something like that during pre-market. You wouldn't be seeing all of these high volume pre-market plays on these. And so in my head, I'm like, that's irregular, because normally this isn't like this. We don't see this until maybe right before the open or something like that. But these have been up here for a while this morning. Then I come and look at the small caps, low floats. And I'm like, okay, well, does anything meet my parameters down here? Nope. I'm looking for things over $5, looking for things with higher relative volume, looking for things that can actually complete their ATR rotation. So if it's got an ATR of $1.12, but it's a 13-cent stock, how does that make sense? How does that make sense? It's $1.12 in the ATR. So it moves $1.12 per day, but it's 13 cents. That's not going to work for me. I need to see something where the ATR is actually doable in the small caps. So if it's $8 and you telling me it's $8 and it's got, a 75-cent ATR, I'm like, okay, well, that 75 cents is doable, and my goal is to get 30 cents per trade. So that's almost double what my goal is. So let's see if I can get it on that, right? So that's kind of how I look at it. But it's got to have the attention. It's got to have the catalyst still. It's got to be moving up. It's got to have some type of trend and structure upward. And we just haven't seen that. And actually, this will be my, today is the 25th. So this is 1, 2, 3, 4, 5, 6, 7, 8 days that I have not traded. I'm green on the month, still sitting, waiting on the setup. but I want to see something within my scope. I don't want to just be out here swinging and at these dollar little stocks or $2 stocks and getting chopped up and losing money unnecessarily. So it is what it is. And I'm okay with sitting on the sideline, man. Yeah, you can easily get 30 cents on large caps. Absolutely. I absolutely agree with you. But not in the time period that I want. My trades usually last between 15 minutes, maybe or a little less for my winning trades. So, I'm not in the trade long. I'm in and out. 30 cents, and most of the times I get more than 30 cents. So like let me go see this. So let's look back. My biggest one, let's see, for this month, what did I get? This for this month. So no, this is not for this month. Okay. So the biggest trade that I had this month was $2.40, 47 cents per share on a low float. And that was on Move, MOVE, $2.47. Now my goal is to get 30 cents, but I'm gonna let it run. I'm gonna let it play. You know what I'm saying? Like, I can get 30 cents, but if it keeps going to $2.47, now I've captured a lot of a Move. And I think Move had, I forgot what the ATR was on it, but it was like I bought it at $13, sold at $15.81. So, and it kept going throughout the day. I didn't even get the full Move. So I got $2.47 off of it. But I'm just saying, like, it met the criteria, met the low float, met the price, met the relative volume, met everything that I wanted, and I just have not seen that since November 10th. Or actually, no, this is last month. Wait, no, we're in the right month. This November, yeah, November 10th. So, all my other winners and all of that stuff is just, I'm just waiting. Just waiting. The goal isn't the all end all be all. I can let it ride. Once I get to 30 cents, I can take a little profit. I can do whatever and let it shoot to the moon. Oh boy, another cheap one up here. Rally. We've seen Rally before. RELY, right at $1. It's up 37%, 11 million shares. Man, they trapping out here, man. They are trapping. Look at this. They are trapping. These little cheap traps. Let's see. Exclusive Reliance. Reliance Global tells Benzinga Company. Tells Benzinga Co. What is it? That doesn't make sense. Okay. Let's go this one. Tells Benzinga Zcash dramatic surge over the past 90 days underscores rising demand for privacy-enabled institution-ready digital assets. Yep, I got plenty of those. Actually, that's one of my focuses in my crypto portfolio is cybersecurity, privacy, and oh my goodness, that's pretty much the two main ones. Cybersecurity is in privacy. They pretty much encapsulate all of the ones that I have. But yeah, I know people want to be decentralized, right? They don't want the government all in their back door, but also they want privacy. They want to know that when they send tokens on your blockchain or they send NFTs or any other assets, that is going to make it where it's supposed to go and it won't be rerouted or lost to some kind of accidental computation. Okay, so yeah, I think I've seen what I need to see for today. Cheaper things moving, maybe something to come up. But these days, I really just been chilling until we see the market heat back up. And just because we see these things 38% movers, 100% movers, doesn't mean the market is hot. for me, the market is hot when there is a clear topic to be traded, right? A clear topic like AI, or like when we seen all this year, the digital asset treasuries. A clear topic that when it pops up, you know some fire is going to probably happen. That's when I'm like, okay, the hot market, a hot market is when people have a focus. They are, you can see it, you can find it, you can play it. But right now, the market is all over the place with these little penny stocks. Some of them are talking about, oh yeah, we're a charter company or a tanker company or whatever we read about earlier. Some of them were talking about, they're all over the place. There's no centralized topic that they're really going on. Yeah, long NFT assets. So NFT assets, well, first of all, NFTs, non-fungible tokens, basically things that can't be changed. You can make anything NFT. You can make a song an NFT. You can make a image an NFT. But the thing is, NFTs can encapsulate other assets. So let's say inside of your NFT, you want to put the deed, a deed to your house, or you want to put, or maybe like a digital deed to your house, or you want to put your passwords or whatever. NFTs can actually encapsulate. So when you buy NFTs, you can actually open the NFT and see, what's hidden inside. Maybe something cool, maybe something somebody tied to it and they forgot about. And now you have way more asset than you were expecting from buying a NFT. Like music, you can patent your NFTs, patent your music NFTs, but they can also encapsulate other assets in there. So it's kind of like a treasure trove. You get one thing, you pay for one thing, but there may be attached value, and those hashes are forever attached to that NFT. For you to remove, you can now the assets inside of the NFT is kind of like having like I said, a treasure chest. You can take them out, you can sell those, you can do whatever you want to with those assets as well. But it's pretty cool. You can literally make anything an NFT. I know they had all those images of the apes. I forgot what they were called. I think they were called apes or something like that. They had all these NFTs of different pictures of apes, but they had things in them. People are like, why are these NFTs worth so much? It's not just because people can buy them and people are just pumping up the price. It may be something in there that people know about. Oh, right. So yeah, I think I've seen everything I want to see for today. Let's circle back around the watch list, and I think I'm going to ease on out. I'm going to do some more work. Every day every day I haven't traded these last 8 days. I just been chilling, working, waiting for the heat to come back, sitting on the sidelines. And I really wouldn't even call it sidelines because I'm still here. I'm still taking in the information. But if there's not, wow, really? Well, you just dove. I'm just taking in the information and making the decision. Hey, does this meet my scope? Is this in something that I can play? Is this something that has a probability that can pay me what I'm looking for? If not, I'll wait. Because the worst thing that you can do is during the end of the year when all of this selling and tax loss harvesting is going on, is go red and then have to go into the beginning of next year trying to recoup what you did on the end of the year. So I'm like, no, I'm good, man. I had an okay year. I'm just sitting and patient. Now my dividends have had more than an okay year. I've been buying dividends this whole time. Small caps, I think you should really only risk about 10% of everything you have, and then put everything else in something safer, dividends or something that, boy, this thing just continues to dive, doesn't it? Wow. But yeah, I'm about to jump off here. I'm getting tired of looking at all this cheap stuff that isn't really doing anything. And the other thing is, at this point, if anything was to pop up, look at all this competition on the board. IVP, 86 million up here. Really? has 19 million, Icon 16 million. So it would have to compete and draw attention away from these. And I just don't think it could do it on the day. If something were to pop up at like 1 million shares up here and try to get going, it's got a lot of competition up here. You only buy ETFs that I reinvest my dividend. Yep. Yeah, I don't touch my dividends. I literally just, I reinvest them. If I need to move to some, I see something else I like, I'll just, you know, use it for that or whatever. I don't touch them. I'm good. I do not touch any of my investments. None of them. I just let my job pay whatever bills and stuff, contracts pay whatever bills, and let it ride. I'm cool. I'm going to sit on it. Wait, pause. Anyway, I'm about to get out of here. And I'm going to see you guys in the next one tomorrow morning. If I see anything that pops up today, I mean, we may or may not, but the pre-market really kind of gives us the storyline. And right now the storyline is large caps. Nvidia is still leading the day with 11 million, but behind it is something that's going to get its earnings today. Baba. Google already made its move, so I'm thinking most of the focus is going to probably go to Baba, which is probably why it's the second leading. But we'll see what happens. Once I get over to the other office, I will pull back up the charts and see what's going on. But yeah, got some work to do today. Anyway, that is it for me today. Appreciate you guys for tuning in for sure. And I'll be back tomorrow morning pre-market. And as always, I will see you guys in the next one. Peace.